Biden's going to say? He's going to go up there and read from the fucking teleprompter. Why would that even be news? You're going to get up there, bada beep, bada boop, bada pop. And I remember when I was a UAW worker. You know, he's a fucking clown. Who cares what he's got to say? Let them fucking iron out their shit. So it's time to short the car companies. Let's see how they're doing. We did do the trade on Adobe. I'll show you this one. So we did do Adobe. Adobe didn't do jack. It's down about $10. I mean, so from where we are, we did the 470. We're at 470, 600. There is, we're nowhere near that. We're going to get a good volatility collapse. It's already up. I'm figuring I'm probably going to be able to buy this back under $1. It's going to come in really nice. They pumped volatility. They took quite a lot of volatility out. I mean, if you remember yesterday, I want to say it was in the 50s. And today now, after earnings, it's at 32.4, and it's probably going to go down to about 10. So that one's going to come in rather nicely. Let's see where the automakers are. I mean, they're really not even like affected by this. I mean, here's Ford. I would say Ford's probably the big guy on the block. They're the ones who have probably the most UAW workers, I think. At least that's what the commercial says. I mean, I don't fucking know. GM, none of these are moving. I mean, so it's all it's all politics. It's all bullshit. Look, I got no skin in the game. I grew up in a union household, so I'm really well aware of what goes on with those union contracts. I always remember my dad saying, you know, no matter what happens, we always get fucked. You know, they all make it seem like, yeah, we won, but at the end of the day, usually they get fucked. And it's not usually they who gets fucked. Usually the people who've been in the union, people with seniority, they get taken care of. It's usually the guys at the bottom of the barrel, and usually the guys coming in usually wind up getting shittier compensation. But, you know, hey, it is what it is, right? I mean, I could care less. You know, again, I don't have a skin in the game, so more power to them. If they get more money out of the companies, good. You know, they obviously, the unions want more money because they get more union dues in the coffers. Right? So I don't think that's in play either. You know, it's all one big crooked mess. You know, is it probably good for the union, for the guys? Yeah, probably guys, you know, UAW, it's probably good for them working. You know, short term, it'll be good. But, you know, 5 years from now, it's probably going to look back and you're going to be like, you know what? That didn't matter. Nobody ever wins. So anyway, let's look at some futures. Let's look at some futures. Yesterday was kind of a nothing day for me. I lost $15. I did a couple of trades on the ES. Did one trade in crude. Crude was actually my only winning trade right now. That seems to be my product. That it seems like the other, maybe I should just trade crude. It seems like the other products are really fucking me over. But needless to say, that's kind of what happened. We're now in this range yesterday. Yesterday was a really bizarre day, man. I mean, like, we grinded higher yesterday, and it was like, it was just like they weren't even hitting. There was like no bids to be found. They were hitting the ass the entire time. It was just like bang, 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 all the way up. And I tried to take a couple of shorts, and they didn't work. I got stopped out quick, which was good, so I didn't have to deal with it. And that's it. So now we're finally in this band. You can see all my alerts now up here have triggered off. And now we're up in this area now. And we're going to see what happens. Now, this was a pretty strong area. This was a pretty strong area of rejection. We've already breached the R1. So here's how it works. At least here's how my strategy works with these pivot points. Someone was asking, you know, so what happens intraday with your pivot points? So the rule of thumb is is, look, if it goes through it once, whether coming down or going up, right? If it goes through it once, it's off the table. It's done for the day. So as far as that natural rejection or natural bounce that you usually get, it's off the table, at least as far as I'm concerned. Now, I can't say that 100% because we've already kind of breached R1 here in the pre-market hours. Now, if it happens again in the market hours, right, and if it cuts through a level a second time during market hours, it's a 50-50 shot with those. It really is. More times than others, if it does make a retrace back. So now, does that R1, does this now R1, if we're going to come up and breach it here, does it now make it a viable short? I don't think so, right? Because we've already, it's kind of like the poker player who's got 6 cards showing in a 7-card game, and it's like you already know his hand. So what else could you possibly have buried under there? And that's kind of the analogy that I would use. And so it's not, again, it's usually a 50-50 shot. Do you want to do it? You could. It's not as a high probability situation. So with that being said, usually when it goes through it once, and the way I always look at it is there's the pre-market breaches and then there's the market hour breaches. Sometimes I separate. It depends on how it got past R1 here. Now, in the after hours, we kind of creeped over R1 after the Europeans Open. So that's something else you could probably mark on your chart. I'm in the process right now I know there's a couple out there that mark time. I'm in the process of doing my own here with Pineatter because I just don't like, because all these other indicators seem to be, I know we're getting off on a tangent here, a lot of these indicators that designate time and what market sessions they are all tied to other indicators. And that I don't like. I want something specific to just the times where I like. So if I were going to block out times, the times that I normally like to block out are the London Open, which is 4 o'clock Eastern time. I like to block out what I always deem as the 10:30 reversal. The 10:30 reversal goes from about 10 o'clock to 11 o'clock, even though it's the 10:30 reversal. And why is it 10:30 reversal? Because there's that hour's worth of trading when the market opens that's almost like a digestion period, especially for big hedge funds. And anybody who's traded with big hedge funds and whatnot, and at least people I've talked to, a lot of times they're not even, depending on what kind of information comes out, at 8:30, a lot of them can't even trade or start trading till 10 o'clock. They don't even let them because they don't want them being involved in that first 30 minutes or so, 45 minutes of the market opening up where it's kind of trying to find where it's going to go. How often times do you see the market will open up and will gap down really hard and then we'll proceed to rally all day, like i.e. yesterday. So, and so a lot of reasons why there's probably more volume that comes in after 10 o'clock, right? You're going to get that initial surge, but you're going to get, I would say, more directional bias between 10 and 11 o'clock. So that's a time that I'd be interested in. And then again, probably the end of the day from 3:15 to 4:15. I don't really give a shit about the Asia session because I'm never really around. At that point, I'm just logging off. I don't even want to deal with anything at that point. On occasion, I'll come in. Am I interested in maybe how Asia is going to open at 8 o'clock and maybe try and squeak one out? Little like screamer. Yeah, once in a while. Once maybe it used to be at least a couple of times a month. Now, if I have one a month, I'm lucky. So anyway, that's kind of the explanation of here with the pivots. So don't chase them and deem them as gospel. Once they're breached, it's over. Just, again, for the day. Once they're breached, they're over. Just kind of put it in the back burner and don't really pay attention to it anymore. Then you're going to be looking at the other levels that didn't get breached, whether it's to the upside or to the downside. And that's the way, just keep it simple. And you can't get more simple than this. This is a strategy that's been used in the pits forever. They used to walk around with cards, little 5x7 index cards with all these numbers. Now, there's obviously other numbers on there for whatever reason, they may have just picked up from other people, like, hey, look, there's a big buy order at this or whatever. But these are pivots that just would come around. They put them on the card, and then when they hit, they traded them. Now, whether they went long or short, I guess it didn't really matter at that point. But these were all numbers that they actually were aware of. So anyway, that's kind of what's going on here. I don't really see myself doing much. With all that being said, and I just wasted how much time on a bunch of bullshit on explaining this. I don't really see a hell of a lot going on here today. It's triple witching, which I'm tired of hearing anybody. Who gives a shit? Who cares? It means nothing. Yeah, maybe 20 years ago it was a big deal because people didn't have Quotrons sitting on their desk. Average Joe couldn't trade thousands of shares of stock from their phone in seconds because, there was literally maybe 1,000 assholes down on the floor of the stock exchange, the specialists who had total control over everything. Not that they don't do that now, but we have all this information at our fingertips now on like what's happening. So who gives a crap? It's just another day. It's all it is. It's just another day. Don't get wrapped up in it. So if I were going to pick a level out of here, it's going to be close to that R3, and it's right above this band here. You could short here. I mean, if you want to be aggressive, I candidly wouldn't argue with anyone who would take a short in here, given that, look, we rejected these overnights 45.66. We are in that band of, I would call, negative delta or downside delta. You can see it's pretty strong. It's been pretty strong in here for a while. It actually has to be on the 1 hour. I mean, you could, but it would be a choppy trade. You're going to have some conviction. You're not going to be able to use no tight stop there. You'd have to do it as a swing trade. Okay, but you can see R3 here kind of coordinates with a red delta band, which I think is pretty cool. It's also right above this high volume node. And so to me, that probably sets up as the trade of the day today, if indeed we can get up there. And that's 45.88. That's a big move today. If we get there, that is a pretty big move. But I'm going to mock it anyway, because crazier things have happened. All right. And so, but outside of that, there's not going to be much anything else really going on here. Did I spell that right now? All right. And this is R3 for the 15th, 2023. And again, this would be a fade on low momentum. Okay, and so you'd have that. So we'll watch that today. Outside of that, that's probably going to be it as far as the ES. I got a number of lines down here. I don't really think we get there. I think we're going to have a range-bound day. I don't really see us ripping much higher. I don't see us really moving down lower. It's probably going to be at the fringes. You're going to see some bit of a directional move on the open, and then probably around 3 o'clock today. I think if you're done trading today by 11:30, just wrap it up and go home. And go home for the weekend and call it a day. Because I think it'll be over by then. I don't think really is going to be much much action. As far as the Russell to me looks like a little bit better trade today. I kind of like this R2 on the Russell, right? You have this high volume node. We didn't breach it overnight. It's not really that big of a move. It's right near that big round number, the BRN 1900. And just saying that, I'm like, wow, I can't even believe through all this, the Russell is actually at 1900. Okay, and so that is another one that I'm going to be watching today on the Russell, which is an R2. And this one's 0915, 2023. And again, this is going to be a fade on low momentum. Yeah, and it's important to point that out, that it's not just like, oh, hey, it gets up there and then you, I mean, because again, if this thing really kind of grinds, if this thing really kind of grinds away, and it really, blows up here with any kind of authority, chances are what's going to happen is this gets breached. That's why I say on low momentum, because if it does have momentum, it's got a good propensity to kind of chew up these sellers up here and drift to the next high volume node. So if you're using a tight stop here, you're going to get probably stopped out, and you may have to take it a couple of times. So I'm just trying to save you the aggravation that watch it. If it's a low momentum move, then it's ripe. But if it's a pretty high momentum move, you may have to wait on it to kind of start its reversal before you jump in. All right, so that's it. That's all I got on the futures, at least on the indices. I'll stick up the NASDAQ because I know everybody trades the NASDAQ. I don't. Nothing there really looks very interesting to me anyway. I don't trade it enough to make anything interesting, so there it is. Let's move over to crude oil. What a freaking beast, right? What a beast. Total beast. We are like now firmly over $90. We are absolutely firmly over $90. I got to go to a 4-hour chart to get any kind of anything. And we're still like now, and we still got plenty of levels up here. Pointed this one out yesterday. 91.78 looks like that's about an R3 now, and that was from a couple of days ago. So I'm going to be looking at that one. 91.78. Not completely out of the realm here of a trade. And right there, 91.78. Light below R3. So we're going to keep that one intact. And again, craziness here. This crude just looks absolutely tremendous these last couple of weeks here since these, is this like August? This is like the August 23rd lows, $77. So $20 move in just under a month, in about a month. Right. That's it. That's all I really got. One of our numbers is still valid here, 8907. High volume node there, and that's now an S1. It's amazing, right? We marked these the other day, and it's funny how they kind of come back, right? It's amazing how these numbers come back. I find it amazing that the more that's why I say if you see something, especially with these high volume nodes and these pivot points that you find, just when you start marking them on a consistent basis, because anybody could do this. It's not me. I'm not like some genius here. Just mark on. I was always told, like, hey, look, if you got a level, market. You'd be amazed at how it repeats itself. And if it repeats itself enough, you're kind of proving your strategy. And again, like, it's nice when these kind of line up. It's nice when they line up, and when they do, it kind of reinforces this whatever strategy you're using. So one thing you can do here with S1 today, since we breached it, now S1 this is support. So we would actually play this bounce to the upside. So if it comes back and retraces back to 89.07, that's going to be a nice entry for a long there. All right, so that's it. That's really all I got in crude. I think if you start getting up above, here where we're at, it's going to be a mess. Again, we haven't really traded up there recently with any amount of time, so there's nothing up there to really use. And then last but not least, soybeans. What a just absolute chop house. What a chop house. Now, if you were watching soybeans yesterday, though, it did have one absolutely perfect. I mean, it was a perfect setup off a pivot. I unfortunately was away from my desk and I wasn't on my phone, but it did have one absolutely perfect setup yesterday. The one we actually alerted on that went out for a fade. It was probably the trade of the day, and I was nowhere near it. But hey, that's what happens. Now, if I was running a paid service, I probably would have said, we made money, and I would make it up, and I would probably say I did it and I'd probably do it in my demo account and make it look like I made a ton of money, and then try to sell you a $30 a month or $50 probably. What are they going for now, these dopey services? They're going for like $100 a month, these clowns are charging. I mean, I can't believe there's actually people paying these people $100 and $150 a month for them to like basically just look at charts and do what I do here for free. And you don't think whatever they're doing is any different than anybody else. You think it's that? Come on. Stop it, please. All right, so that's it. And then natural gas. I think natural gas is still like in a good area to consolidate and get long. I really like the price action here on Natty as long as we stay above kind of 25, 250, 230, 25, 60. So blah, blah, blah. Right in that area, I think we continue to plow higher, and we have that $3 mark. So we're kind of looking, that's kind of our target. And that's it on the futures. I'll throw bonds up there. I think bonds are looking interesting, if I was going to say anything. They look like crap, right? But expectedly so, right? If they're raising interest rates and inflation is high, right, what's going to happen with bond prices? Yeah, right? Now, the good thing about bond prices right now, and I believe is what it's doing, is it's attracting a whole new slew of investors that probably never traded bonds, because you figure if you're in your 30s, or 40s, even early 40s, late 30s, and younger, you never traded bonds because they pretty much made bonds the worst investment on the planet. Bonds were a horrible investment for the last 15, almost 20 freaking years. They just destroyed the bond market. When I first started in this business, I remember like banging poor old people over the head because I had a CMO that was yielding, 9 or 10%. And they're like, well, why would I buy that? I'm getting 8% in a CD. And like, I'd be like, yeah, because I kind of need the money because I need commission. That's why I don't do that anymore. But that's kind of what was going on then. I mean, I remember vividly. I mean, people were sitting in a CD account and they were making 8%, some of them 10, 11 on tax-free bonds. They were getting 8% on a tax-free bond, and here I am with I got a CMO that's yielding 10%. I'm like, what the fuck's a CMO? Well, just to let you know, a CMO is nothing more than those shitty bonds that they were offering, those bonds they were offering back in 2008. They were just repurposed. to whatever those things, I forgot what the hell they were used, but that was the same thing. They were from Freddie Mac, they were from Fannie Mae, they were from Ginnie Mae, and they were just repackaged garbage with an insurance policy wrapped around them that it paid interest. And boy, did those things get crushed too. So anyway, that's just kind of dates myself. But I think bonds look interesting for a long, only that even if interest rates do to continue to creep up a little bit, they're a good play because, again, now I can go and buy a bond and I could sit in cash. You know, you're going to get taxed on it. You know, unfortunately, that's just what happens. But if you're doing it in an IRA and you're sitting on a boatload of cash, you can get 4% now sitting in a money market account in a lot of places. And not only that, but, you know, I can go soak into some 5-year notes even at some decent prices and not have to deal with the fluctuation. I know I'm going to get 4 or 5%. I mean, and hey, who cares? With no risk. No risk. So I do think bonds are a good play here. And the way I would play the bonds is I always like the TLT. You can do TBT. I know there's a lot of folks that do TBT. I'm not really a fan of it. It's an inverse, or is it an inverse or ultra? TBT. I don't even know what it is. Yeah, it's ultra short. So you would go, so if you want to go long, you would have to go short this, right? So it kind of gets confusing. But you could use either one. TLT's just as good. There's no liquidity. I mean, no IV rank in this at all. But I like, Jay, you can see I already have stuff in October, and I've been actually building a small little bond position, and I've been just kind of ticking off these little trades, like stuff like this, like 91s, 93, 92, just kind of going right around the money, basically 50-50, and just kind of accumulating. I wish I could do something else in here. I wish I could be a little more aggressive. Now, if you want to be a little more aggressive, maybe go out to a 95 and do like a 95-100 spread. You're not going to spend a ton of money. I mean, you spend $150. Look, obviously you only got a 35% probability of profit, but you bought yourself a little bit of time. And the other thing is, like, there's not a lot of theta burn in this. So even though I'm out in time and I'm getting some positive delta, I don't really have a lot of theta here to worry about this thing getting chewed away on time. So, you know, again, it's just another small little dink and dunk kind of thing. Because let's face it, when bonds pop and they go the other way, and they do eventually rally, I think you're going to get a bit of a squeeze on them that, you know, you're going to get a bunch of people that are going to run. Anybody who's short's going to go run and cover. And so anyway, that's kind of how I'm playing it. Real simple stuff, 95. If you want to get a little more fancy, maybe you do a calendar spread. I still like the December expiry, so I would do a calendar spread I would do December, January. And basically what a calendar spread is, if you're not familiar with it, basically buying the same strike over 2 expiries. All right. And then you would just do long call calendar. And this one is the December D. So you always sell, again, you don't always, but you sell the front month, buy the back month. And in this situation, this is a $43 trade. You can do this in any account. That's the beauty of these. You do this in any account. You're not getting a whole huge amount of delta. You're not going to make a huge amount of money on this either. But for what you're spending on the trade, your risk reward, it's actually a pretty good risk reward. I mean, on something like this, you can make, you could make 15, 20, maybe 25%. Depending on how many you do. So if you want to widen it, so maybe you do, maybe you go a little wider. Maybe you do like a 105. It's going to cost you a little bit more money. You see, you're going to get a little more delta here. Let me get my pen too. I need a pen too. You're going to get a little bit more delta here on this one, but you're taking on a little more risk, and you're actually going to, you're actually paying a little more money. So that's kind of how I would do things in the TLT. And I'm just looking at time. We're almost on 30 minutes. And as far as stocks, I got nothing. I got nothing in the stock world. The only thing I really did was the Adobe. The Adobe was Adobe. That was it. Didn't do anything. I was looking at Save. I was going to look at Save, which is which is Spirit Airlines. It's just nothing there really struck me as remotely interesting, so I kind of stayed away. Oracle, what'd I say? No, I had a 50-50 chance, all right? So, I'm no genius. But it did bounce, and, miraculously, it did kind of bounce right around where I expected it to. It's always nice when that happens. And we did get a nice bounce yesterday with it. That's it. And so I'm going to be looking to take Adobe off today. You can see it really didn't do much of anything. I don't know if I'd really even be interested in this stock at all. I mean, even at 519, where I see it possible a little support there, I don't even know if I'd even want to buy it there. Again, $500 stock, who cares? That's it. That's really all I got, because I don't really see anything really moving. Oh, and then you had, what was it? ARM, right? With a new issue, ARM came out. Who cares? Right? Who cares? $60 billion, I think it was. Wasn't a 60 billion float or something like that? I saw them put it up on the screen as it was going around. $60 billion. And I saw everybody clapping like, yay! It's like, yeah, all those people you hate. Right, all those people you hate, the chairmans and the board, and all those people on the board, yeah, they all cashed out. Yay, let's cheer them on because we got a bunch of stock options. Right, we're still gonna get fucked, you dumb assholes. Right, it's like, oh, who cares? Right, talk to me in 3 months or talk to me in a month when this thing's got options, because I'm not gonna touch it. I don't even know what is it. What do they do? What do they do anyway? What would you say it is you do here? Where's that quote from? ARM Holdings operates as a holding company, shocker, holding company with interests in providing semiconductor technology. It architects, develops, and licenses CPU products. The company was founded and is headquartered in Cambridge, United Kingdom. Whatever. All right, yeah, whatever. Wop, 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 wop. So it's an actual ADR, American Depository Receipt. It's based in the UK, so it trades in the US now. So you have that whole thing that like nobody's going to talk about, right? So there's going to be a risk. Now, look, if you got the IPO, which I doubt anybody listening to this got the IPO because that all went to all the insiders, right, who were able to get the IPO. You're sitting pretty right now. So who cares? We'll keep an eye on it, see what it does. I'm interested to see how liquid it becomes. Like, I want to see options and I want to see all that, and I want to see its liquidity. And if it does gather some liquidity, yeah, I'll trade it. Why not? All right, so that's it. Have a good weekend. I will be back. It's been a fun week. Been good moments and bad moments, but overall pretty good. And hopefully we'll be back on Monday. And please, if you're interested, Discord is completely open now. And I do post all the trades in there, and all the alerts that I put up, they all hit in there. So, and again, nothing's a secret. It's very quiet in there. It used to be a very busy place, but pretty much shut it down because I just wasn't really interested in managing it. So, but I'm back, and just to give you an idea, this is it. Hold on. There it is. So here it is. I mean, they all come across. You can see they're all there when they hit. They all hit in this Trade archive. I mean, there's just tons and tons and tons of stuff in here. But they're all there. Nowhere to hide, man. Nowhere to hide. All right, so that's it. Have a good weekend, and I'll be back on Monday. And then we hit it.